Welcome to the STR Data Lab.
Hello and welcome to another edition of the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today with a great guest. I think you guys are going to love this conversation. We've got Dustin Abney, CEO of Portoro, a vacation rental management company. And really, and you guys are expanding, buying companies like all around the country.
Yeah.
Dustin, welcome to the show.
Awesome. Thanks, Jamie. Glad to be here. Really appreciate it.
So you're one of those guests that like multiple people told me I need to be interviewing Dustin. We had dinner or drinks or whatever it was. We were at a event up in New York a few months ago. So I'm really excited to maybe dig in first a little bit about your history, and then sort of what led you to becoming CEO.
Awesome, man. Yeah, I'm flattered by that and happy to dive in. Let's do it.
Great. So how'd you get into the industry?
Yeah, it's been a very long journey, so I'll try to make a long story short here. But I've been in real estate and real estate SaaS specifically for majority of my professional career. I started out with a company called Dot Loop in Nowheresville, Cincinnati, Ohio, and we were focused on real estate SaaS products. In working with that, I've got connected to a lot of real estate agents, people flipping houses, et cetera, et cetera. So I got passionate about real estate generally as an industry. And I bought my first vacation home, albeit a very crappy bank owned condo in Nowheresville, north of Knoxville, Tennessee, with my wife. And we remodeled that. And the goal was just literally to pay the bills so that we could vacation there. Quickly started to discover that this industry was growing. I was making more money than I expected, and the things and tweaks that we did to this property, I could tell we were standing out. So at that point in time, I was still with the same company. We were under Zillow. It exited to Zillow Group, and I started plotting like how could I professionalize what I love to do, which was manage this little vacation rental. And so I left Zillow Group and started a company called D. Alexander. I will say one of the first of its kind. There are many of this kind now, but it's really the PropCo OpCo model. So me and a couple founders, we raised some money and bought about 18 vacation homes across the country. And our goal was to, own and manage this, portfolio of homes and continue to grow that. As many experienced, COVID reared its ugly head, and we weren't sure what to do about capital raise, et cetera. And so I left that company and I joined AvantStay, which I'm sure many of your listeners have gotten to know. One of the leaders in the space, had a great experience there. Helped grow that as a vice president for 2 years, and as an entrepreneur and somebody who just really likes studying marketplaces and what's going on in industries, I started to see some trends and started to develop my thoughts around, okay, if I was to do this again myself, how would I approach the market? How would I approach the industry, and what could I build? And that eventually became Portoro. And I would sum it up as I saw some real glaring opportunities, right? Super fragmented market, a lot of consolidation happening, sort of this emergence of tech enabled services, the use of technology to beat competition, and brand mattering really importantly. And so that's how we started to put the pieces together to develop the strategy of what Portoro would become. And we launched the company in August of 2022.
Okay. So coming up on 2-year anniversary pretty quickly.
Yeah.
Uh,
Yeah.
so give us sort of some of the stats, like how many markets you in, how many units are you up to? Like what are the sort of base stats on where the company's at?
Yeah, so we launched in August. We started managing in January. So the first couple of months of existence was really, building the tech stack, putting the team together, and really honing in on the strategy. We've grown now in that short period of time from January 2023 of operating to now. We're at above 270 units, and we are in, I'll call it 10 markets, six main markets. We've got some sub markets. Most of them are coastal. So think Oregon, Pacific Northwest, down to Texas, Florida, Charleston, up to Virginia, and then Austin, Texas as well. So grown pretty substantially. Great mix of acquisitions of property management companies that we've partnered with, and then some organic growth layered on top of that.
So that's great. So with these acquisitions, like and maybe the exit to Zillow was pretty good, but how are you how are you sort of funding these acquisitions? Have you gone out and raised money? Was part of that sort of getting started, raising money? Like, how are you guys going after and buying these companies?
Yeah, I will say that the Zillow exit was great for the founders. It was okay for the employees, but the experience itself was invaluable, and I learned a lot. But yeah, so we know that obviously to grow and to acquire companies takes capital. So we partnered with our venture capital firm, Downing Capital Group. They're out of New York City, and we've got some venture debt. So we're using some outside capital resources to acquire these companies to help us grow. I will say that this isn't a typical roll-up strategy. We're taking a very strategic approach to acquisitions. Think of it as a brand of brands. We partner, really closely with those local brands, and we really use acquisitions as a way to enter markets. So we enter markets, we bring those companies onto our platform, but maintain really the integrity and the local brand, and then grow from there with a combined Portoro brand.
Yeah, that was gonna be my next question on sort of keeping local brand versus sort of a roll-up brand. And what was the thought there, that why get rid of the value of the brand? Or and what's your thesis there?
Yeah, so I think there's value in those local brands. Obviously, a lot of the folks that we've acquired and many others out there have done something great and special, right? They're super connected to their local communities. They've got a lot of brand recognition with travelers and repeat guests. So we didn't want to tarnish what they've built thus far, but we knew that, combining companies across multiple regions, we needed to consolidate into some sort of national brand that more travelers could recognize and more guests could recognize. So I think of it as combining, best of both worlds, right? So we've got this national Portoro brand. All the listings are on our Portoro.com website. Explains, who we are, what we're about, and how we manage properties and guests. But with those local brands, we want to maintain that. So, we've seen it done in many different ways. With other companies making acquisitions, and, I gained a lot of experience in prior companies, figuring out what was the best method, right? How do we maintain that integrity of those brands, really capitalize on what they built, but then also sort of build this large national brand. So we're doing a combination of both.
That's great. And the other sort of question that comes top of mind, especially with venture funding, it's like, are you building your own tech stack, or are you partnering with others? Because and obviously we've seen it done both ways. And I've heard the argument both ways of like, if we're gonna take venture funding, we got to build our moat. Like, we've got to have some way to differentiate ourselves. And also, like, and that it can be expensive. It can be
Very,
like
yeah.
yeah.
So coming from the SaaS world, definitely building product is expensive and it's tough, and you have to continue to iterate and keep investing in it. And like you said, we've seen it done multiple different ways in this industry. And so again, I took a step back and we started to think about, what is out there, what's sort of happening with the product landscape in the marketplace, and how can we use a combination of what's out there and why would we use that, and then where do we see gaps and can we build things to actually fill those gaps. So we're using off the shelf technology with great partners like PMSs, pricing engines, task management, et cetera. But and I see those things similar to what I experienced in the real estate SaaS marketplace, which is the products get better, they get commoditized, there's consolidation, prices go down. So it's very affordable to use off the shelf technology. But there's still some glaring gaps that we saw in the industry. One I'll highlight is, homeowners. If you've ever had your property managed by a property manager, and I did at the time when I owned, is that there's really no insight. There's no dashboard. And yes, of course, some PMSs offer something, but it's pretty subpar to what we're used to with our banking apps and, scheduling and all the other things that we use as consumers on a daily basis. So we set out to make the homeowner as our, most important asset of the company outside of our employees, a very, very strategic piece that we wanted to build around. So we've built and launched a very custom homeowner portal, and think of it as giving them a lot more access to information, data insights on their property performance, maintenance, and there's also some self-service tools that we offer there. We're building some other tools again to fill gaps. Think last mile logistics. Obviously, as a very distributed workforce, we need people to be on schedule and routed properly. And then, the other place where we saw the emergence of demand was guests want some of the benefits of traditional hospitality, think hotels, right? With, meals, spas, amenities, those types of things. And we wanted to enable that. So we're enabling that through our booking engine and our Portoro.com website. So those are the three main categories. There's other things that we're thinking about building as sort of the marketplace seems to mature, but we're using a combination of great off the shelf partners and vendors and building some of our own technology.
That seems reasonable in a way of going about it.
Yeah.
I,
I will
I,
say we're not building a PMS. There's enough of those out there, and we can't raise hundreds of millions of dollars to do just that. So we're
yeah.
not doing that.
Yeah. So, and you talked a little bit about sort of the markets you're in and sort of using your acquisition strategy to help sort of select markets. And when I sort of look at the site, I see maybe a mix of different location types. Like you've got Austin, but you also have like beach locations. You've got North Charleston. So, what is your thought between like urban markets and vacation rental markets in terms of and where you see the future of the company?
Yeah, totally. So, entering a market is, obviously probably the one of the most strategic decisions that we make. Like, how are we going to enter a market? Why are we going to enter that market? Who are we going to partner with when we enter that market? It's very strategic. The way that I think about and Portfolio thinks about market selection is we try to look at it from many different angles, and there's no one silver bullet, but we think about destinations that have very strong traveler demand over the course of, the past decade or so, typically have some sort of regulatory environment that's already in place so that we know what to expect and we're not surprised by large changes. And then where we see inventory, demand, RevPAR, all those metrics stable or growing in the right direction, right? And then we look at, okay, what are the dynamics? Like, are these fly to markets? Are they drive to markets? Is economics in downturns going to impact those? So it's a lot of inputs all over the place, and some will be stronger than others. But if you look at most of our markets, they're somewhat traditional for travel, whether it's transient travel, vacation travel, right? We're looking at those markets as, okay, obviously people want to be here. They've grown in demand. They're getting notoriety, and we want to be where people want to be. So we're looking at that as a big piece. But if you also look at, I'll take Austin for example. We started off in Travis Heights. If you're familiar with Austin, it's South Congress. It's very dense in the urban core. But if you zoom out of Austin, right, you've got a million different submarkets that you can expand into the lake markets, Dripping Springs, Fredericksburg. So when we entered that market, we think, great, we've got a really nice core. How do we build around that? So we started with 25 properties, and now if you look at the map, we're at 85 properties, all the way out to Dripping Springs now. And, Charleston, same, North Charleston, Isle of Palms, Kiowa. And, we're in Oregon, Sun River, Lincoln City, Depot Bay. So you see these hubs that we can implant ourselves and then find ways to expand in these submarkets so that we can grow our presence and grow our market share. And from an operations perspective, it makes sense to grow, sort of outward in a radius.
And so operations like for Austin, do you guys keep like central operations in that market, and then sort of as you expand out, you don't necessarily need a strong local footprint in those areas because you do have Austin so close? Like, is that how it sort of works?
Yeah, so the way we approach our team is, we invest a lot in the local teams and boots on the ground, and we acquire companies. We, try at least for the most part to keep everybody on the ground. They know the market the best. They know the homes, the guests, the vendors, etc. And as we expand out, it's much easier to add one person, in a zip code over, or drive to that zip code until we have enough density to add local people. So we do have a lot of boots on the ground. Then that's supported by what we call our HQ operations. We obviously live in a post-COVID world. We're all remote. So think, guest reservations, our revenue management team, legal HR, all that kind of stuff, accounting. We're distributed across the US, which gives us a lot of access and ability to great talent. So it's sort of a combined, boots on the ground supported with HQ operations distributed. But just so happens that Austin was our first market, so we hired a lot of people in Austin. So it is very dense with our HQ team as well. But we love Texas. We got a lot of employees in Texas.
Yeah. like looking at your map, it looks like you have about 50 properties in the Austin area. Is that right?
Yeah, we just added a bunch. Like you'll see properties get added every week. We actually have 85 properties in the greater Austin area right now.
So what does a team like? How many how many people is that like for managing 100 properties? Like, and if you think maybe like the average listener here, like maybe has like growing their portfolio 3, 4, 5, they hope to get to 10. Like, what does it take to like actually scale a team to be able to manage that many properties?
Yeah. I will caveat this answer with we invest and we've got the capital invest in a lot of people on the ground. So the typical person might not have this many, but that's where our value comes into play. So in Austin locally, we have, 5 property managers, area managers, assistant area managers. Those are the people taking care of the homes, coordinating with vendors, working with guests. And then we also have a homeowner success manager. Just one thing we do implant in our markets. That is the point of contact for the homeowner that at any point in time, this person's been in their house, can go to their house, they talk to them about their statements, revenue, et cetera, just dedicated to the manager. And then of course we have a myriad of 1099, cleaners and maintenance folks. But 85 properties, yeah, five property managers combined with the homeowner success manager. I will say based on the technology that we use, we're able to do that. We schedule very tight. Our teams are super active, and we've got great folks. So, having our experience from our operations team operating thousands of companies, like we can put that together. But what I've seen is, you hit these certain chasms that you have to invest in that next person, right? It might be 10 properties, then 25, then 50 and 100.
Hmm.
That's where, smaller operators who are aspiring to grow, they sort of hit those chasms, right? You sort of start off as that owner operator and you got to hire that next person. And so that's, those tranches are like where we see the big hiring, limits is 10, 25, 50, 100, where you got to add that next person and really hire ahead.
And so you think about it in terms of like units and not revenue. It's like if, as we're adding units, like once we hit that next chasm, then we got to hire someone else, and hiring the 1099 workers, it's just on a as needed. Like if we need more cleans, whatever's happening, and more maintenance work, it's just you can add, expand as necessary.
Yeah, we like to hire W-2 employees, obviously, for our property managers and all of our staff typically is full time, except those cleaners and maintenance vendors and those types, because they reach their capacity too, right? There's only a certain amount of cleaners in a market, and you've got to add that next company or that next vendor. So all of our property managers, our homeowner success, et cetera, they're all W-2, but we've got a ton of 1099 employees that work as vendors for us in that capacity. But yeah, we think of it as home count. We're focused on a niche or a subset of the market. We're typically taking homes that are 3 to 7 bedrooms, and so it gives us the certainty to know that we add a certain number of homes, what kind of staff we're going to need. We're not taking the 1 bedroom condo or the subunit in the backyard. We know, based on our average home count of 4 bedrooms, how many properties it's going to take to manage that.
Yeah, and so in a market, like in the urban market, so you guys, is it all single family homes, or are you thinking any multifamily?
Yeah, so I would say probably 95% are all single family homes. We like single family homes. They're easy to operate. There's a lot of complexity with multifamily and working with the building and access. We have taken on a couple of smaller units in the early days, but our focus is single family, larger bedroom count and sort of premium in the quality and appointments of the home. Yeah.
Yeah, so and obviously, and these past 2 years have been maybe two of the more volatile years for industry performance, like sort of starting in 2022, like, and 2021 and 2022 will probably go down as peak years for industry performance. And across the industry, we've seen unit economics go down in terms of revpars, occupancies, especially and in markets like Austin and even some of the beach markets. Like, and how are you guys doing? Like, is it are you guys feeling it just like everyone else, or and how's it been going?
Well, I mean, it's a great question. Obviously, you look at the data that you guys provide and others, and it points to a lot of those challenges. I will give a lot of credit to our revenue manager. He's an absolute stud. So we look at pacing in our data obsessively. We're a data-driven company, and I think that is key to how we've performed. I will say that based on the data that AirDNA provides and others, we are performing quite well against our competitors in the market, 20 to 30% above where the competitive base is. And I think, and our data has shown that because we've switched our strategy from, chasing ADRs in the peak seasons to blending that towards occupancy and now focusing on occupancy and really high end homes, it's played out really, really well for us. So yes, we're feeling the pressures of, increased inventory, a slight downward trend in demand in some of these areas, but our performance is staying at least at the levels that we think are appropriate for these homes and given the market conditions. We're seeing, some really interesting positive trends in some of our other markets. St. Augustine, Volano Beach area where we operate, we're seeing occupancy and ADRs and RevPAR grow in that market year over year. So it really depends on the market. Obviously, as an economist and studying markets, it's supply and demand, right? As more inventory comes in, pushes prices and demand softens, you have that issue. But I can say with confidence we've done really, really well against the market pressures and are beating a lot of our competition. Yeah.
Yeah. So, and as you look out in terms of growth, like what and percent do you think it's going to be in terms of sort of more acquisition, sort of inventory growth versus organic, and how are you guys setting yourself up for that organic growth?
Yeah, that's a great question. Obviously, we're not just out acquiring to do a roll up. We buy to enter markets, and organic is a huge part of our strategy. I think it's super important just for business health and growth. Along with that, which nobody talks about, is retention. So retaining homeowners is a key piece of that. So I'll give it our Austin market as an example. We started with 25 almost a year and a half ago. We're at 85 properties. So we've far surpassed organic growth than we have with our inorganic M&A growth. And that should be the trend as we age as a company. We will still use acquisitions as we enter markets. We plan to do at least an acquisition every quarter, if not 2 to 3 a quarter. It's the pace at which we feel comfortable, doing that. Acquisitions take a lot of capital. It takes a lot of key team resources to integrate companies. And we take a very strategic, long approach to integrations. It's very important. And the reason we do that is for retention, right? We want to keep homeowners. And so I'm happy to say, our organic retention is at 99%. Our M&A retention is at 95%. A lot of that due to home sales and things. So I guess to sum it up, acquisitions will always be part of our business practice, but we're really excited about what we're doing with organic, and that's investing in the local teams, professionalizing our sales and marketing departments and growing that business. And we like to put our portfolio and our performance at the forefront, and that's helped us grow in places like Austin, Texas.
Makes sense. And we've talked a lot about sort of the operations of it. And is there any propco, or are you guys pure operations?
Yeah, we're pure operations. I would love to do Propco again, but timing is everything, right? I got stupid lucky back in 2017 and 18 when we started D. Alexander. We bought, house prices went up, revenues went up. It was just dumb luck. People told us, actually, investors who walked away, "You're buying at the peak," and we obviously we won that battle. But I think, it's tough right now as an investor to buy at really, really high cap rates. If you're looking for a small cap rate, in the 5, 6 range, you can probably gobble up a couple, but most investors want 9, 10 plus cap rates. And so it's hard. We've chosen a different approach. We're hyper focused on OpCo right now and being a property manager. Always in the back of my head, when is the right time to start a PropCo again? And we look to do that. But also we're working on partnerships with PropCo. I've done both before. We did it at AvantStay. I did it at D. Alexander. They're two completely separate businesses, and it's very capital intensive to run both. And so right now we're working with creating some partnerships with some PropCos that are operating but don't particularly want to continue to operate or open a new market and operate. And so we think that's very advantageous for us. But yeah, always love, investing in real estate, whether it's personally or professionally. So Propco is always in the back of my mind. It's just always about that timing when interest rates drop and prices settle down.
That's what I was gonna ask the next question, like, what do you think that timing is? Is it just a pure interest rates at 7.5 right now, or just don't make it worth it? Like, the home prices, and
There's a
there
lot
'cause
at play.
there's no guarantee home prices ever come down, and there's the sort of school of thought that interest rates are gonna be elevated for longer, that we've gotta get used to 6, that even 5s might not be coming back in the next 4 or 5
Yeah.
years, like, so what are the other factors that would sort of make you think that PropCo might be a good, or if those dynamics stay, then maybe it never makes sense?
Yeah, I mean, there are so many dynamics at play, right? You mentioned a couple of them. Home prices are super elevated. Interest rates are obviously high. There's no sign of them getting down to, pre-COVID levels down in the threes. And then you look at just sort of greater macro, economic trends. We're at a housing shortage. Like, there's a lot of things going against starting a propco right now. But we talked to a lot of people when we were in New York and other places, right? There's a lot of interest in it because for that, STR hospitality sector, it's sort of the last professionalized or propco institutionalized investment vehicle, right? We've seen it in long-term rentals and, multifamily, et cetera. So we know there's a lot of money sitting on the sidelines. There's a lot of interest in doing it. I think if you've got the right capital partner that's got patient capital and, a very, very deep bank and deep pockets, you can buy and then recapitalize sometime down later when it makes sense. So I'm not sure, but I think you've got to start to see at least one or two of those levers start to move or pull down to make it make sense. Will it ever? I don't know. Maybe buildings the right. There's a lot of built for stay stuff going on in that sector, but yeah, I think we've got to see more levers pulled, and I would say that at least in the next 6 months or years, probably unlikely, that it makes a ton of sense. Now, there are some other folks out there that have differing opinions and finding very niche, but when you think about propco, you've got to deploy a ton of capital for it to make sense. That's the challenge. You can find these one-off opportunities and make great cap returns, but to deploy 100 million, $200 million in this industry is very tough and very time consuming. So that's where I see the challenge.
Yeah, and is that something that your current investors would have an appetite for, or that maybe that would take an entirely new group that would really be interested in going after that?
Yeah, I think it would take an entirely new group that we would, create some sort of new entity and co-invest. Right now, we're just hyper focused on being the best property manager out there, and that's what we've set our sights on. But we know there's these other opportunities that we're interested in. But yeah, right now our investors are focused on us building a great platform and consolidating the industry.
Yeah, so one of my favorite sort of narratives to go down is just how different this maybe is now than what you were expecting. So, and you've been in the industry and for a while, but now you're sort of sitting in the CEO seat. You're sort of running a and growing operation company. So, what sort of challenges have been there that maybe you weren't expecting, knowing that? And I'm sure you knew there was going to be a lot of challenges coming in.
Yeah, how much more time do we have? No, I'm kidding. You always have these thoughts about entrepreneurship and sitting in the seat and what it's gonna be like, and having done it before, I had a taste, right? And I was at a startup company, so I had a lot of exposure to what to expect, but being in the CEO seat and leading a company definitely, presents itself with its unique challenges. I would say the glaring obvious challenge is just companies are made up of people, especially when you're acquiring companies. And it never surprises me just how much time, resource, and energy you really need to invest in the people and the relationships and reinforcing the story and getting everybody aligned and putting the right people in the right seats at the right time. And so that always, pops up as one of those things like, wow, I've spent a lot of time talking to my team to our partners and ensuring that people are in the right place. The other thing I would say is, definitely market dynamics always, surprise you. You think a market's heading in one place, and, demand can shift, inventory can shift, all these things. So you always got a plan until you get punched in the face. I've heard that one before. And
Yeah.
so being able to be nimble and, always think about, changing your strategy, or at least modifying and pivoting is super important. And yeah, I think flexibility and open-mindedness is something that always comes back to me. But yeah, I would say people and market conditions and, challengers and competition, all those things sort of surprise you. Everybody starts a company thinking they're the best in the world, right? But there's a lot of bests in the world. So you got to find out how to continue to iterate and pivot. So that's that. I would say those are the big things.
Oh, that's great. And what does your sort of executive team look like now? Like, are you? I know you said like centralizing back of the house a lot of it, keeping those local teams. So how has that sort of evolved as sort of building out a team that I assume is going to be the team that helps you sort of grow this?
Yeah, I would say, fortunately for us, the industry has experienced, its fair share of pullbacks and layoffs and things, which has given us an opportunity to scoop up an amazing team. I mean, that's why I always preach that our team is the reason we're successful, and so we've got a lot of great industry experience. There's, sort of two schools of thought I've really come to realize in this industry is that to build a really big, great company, you need to have people from outside the industry that have built, big companies and done things. But we continue to come across people in this industry that are, really, really smart, understand what game we're playing and able to build some great things. So, we continue to add, great folks. Our C-suite is super strong. Kenny, our COO, I've worked with in the past, and he's operated thousands of homes across hundreds of markets. We just hired a head of sales and marketing, which I'm excited about, head of guest experience, some from, Vacasa and other small local players. So we've got a combination of really strong people, but I would say mostly industry driven folks that are excited about what we're building and taking what they've learned, but having that open mindedness to think about things differently and how that fits into our model.
Yeah, so I mean, as you guys are sitting in your executive meetings, like, who are you thinking now is like your competition? Like, is it companies that you're going against to like acquire other small PMs? Is it existing companies that are in your market that you're competing against for guests? Like, who do you have on your bullseye in your office that you guys are
Yes,
coming
yes,
after?
yes, yes, yes. The crazy thing about these markets, like what we're in, these marketplaces, is that they're highly fragmented. And not only are you competing with the big companies like Vacasa and B Trips and AvantStay and all these others, right? You're competing with the small local, property management company that does a really good job with hospitality. 20,000 or more property managers, 1.6 million plus listings. Like, you're competing with everybody. And so, you could focus on competition, and focus externally. But what I've learned early on, and a lot of my mentors, is focus on yourself as your own best competition. How can we continue to get 1% better every day? What trends are we seeing? How can we, be the best that we can? And then we'll rise above. And what's interesting, you mentioned like other people in the marketplace acquiring. We've seen some of that competition go away. There's been a slowdown of the competition in the acquisitions that we've made, which is helpful for us. But there's no shortage of great property managers out there that we're competing with all the time for new homeowners and new guests and all those things. So it's attacks coming from all angles. But honestly and truthfully, we're focused on ourselves as our own best competition. Like, how can we get better? And we think if we do that, we'll rise above and we'll look back and see everybody else in our rearview mirror. Or at least that's the hope.
So if we do have some like property managers listening in and they're like, "Oh, I wonder if they'd be interested in buying my company." Like, what does your sort of buy box look like right now of like type of companies that would be really attractive to you? Like, is it unit count? Is it only in certain types of markets, certain areas? Like, what sort of would fit your criteria?
Yeah, it's a good question. I would say, we mentioned markets previously. So we're not looking at very, very small niche markets where we can't grow unit count. So, if you're a property manager, think zoom out, bigger picture, like how many properties can you grow to? We tend to find with the 7 acquisitions that we've done, it's typically sort of in that 50-ish property count. And that, lends itself to a lot of other things, right? They've been growing at a good pace year over year. They've got good retention. They've got a pretty good team in place. They've got at least some sort of tech stack built that they are operating with that we can pull in and integrate with our company. They got to be making money. We're building profit or buying profitable companies. And so, I would think, about those things if I'm a property manager. And the other thing that we do is, we don't just buy companies and tell the sellers, see you later, and they retire and go off into the sunset. We want them to stay involved. It's pretty critical in our process for them to stay involved at least some period of the time. So a lot of people think about that walk away money, and sort of selling off into the sunset. In services industry, that you have to be really, really big to have walk away money. So think about, okay, how can I partner with a company like Portoro and help them go to the next level, and it'll be advantageous for both of us. So yeah, I would say 50-ish properties, making some good EBITDA and net income, good retention, and a pipeline of homes that we can bring on for sure.
That's great. So we're coming towards the end. But one of my and other sort of favorite lines to sort of get into is like, and this will be the second to last question is like, if we came back a year from now, what do you think the headline for your company or you will be of like terms of accomplishments? Like, is it that in 4 quarters from now, you guys acquired just 4 more companies, or you grew organic? Like, what do you think that big headline is for you guys that could come true?
If I had to predict, and what we're striving for is we're emerging as, the fastest growing property management company in the US. And that's a combination of more acquisitions, 4 to 5 more acquisitions, at least one a quarter. But you would also see that our organic growth is quickly outpacing our inorganic growth, which is a testament to our operations and our revenue management and all those things. So say 4 quarters from now, we better be over double size and, in probably 5 or 6 new markets and crushing it and emerging as a leader in our space. I would be very happy if that came true.
That's great. I love sort of ending on that. And if people want to reach out, if they want to find you, follow the company, and where should they go?
Yeah, we're on all the social media at Portoro Homes. You can find me on LinkedIn. You can email me directly. I always open this up at the end, and it's a dangerous thing, but I love connecting with people in the industry, and I've truly done it on many occasions. Dustin at Portoro.com. So feel free to reach out to us. Drop at our website Portoro.com, and you can find us on all the channels.
Awesome. Dustin, thank you so much for joining. I really enjoyed the conversation. Thank you for being so transparent in what's going on with the company.
Awesome. Thanks for having me, Jamie. Really appreciate it.